From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming April 8th Forex session in the Euro US dollar pair. You can see on the chart I have the 50-day exponential moving average. It's offered quite a bit of support and resistance over the last several months, actually 18 months or so that we have on this chart. And you can also see that we approached it late in the day on Friday and managed to close below it. Now, when looking at the candle for Friday, you have to keep in mind that this was after a bad jobs number. So this may have just simply been a bit of short covering, people not wanting to be in the dollar. But the euro itself got a boost from what? From the central bank simply saying that they weren't going to do anything, but were ready to act if needed. A lot of traders think that the euro will eventually have to ease, or the Europeans will eventually have to ease their interest rates. I am one of them as well. And quite frankly, they just have been steadfastly hawkish. Nonetheless, there are plenty of problems in Europe and lots of confidence killing issues, such as the way they just handled the whole debacle in Cyprus, raiding depositors to bail in the banks, as they call it. If you were a fund manager or somebody who just had quite a bit of money, you certainly would be aware of this and would be leery of putting money in like an Italian or a Spanish bank when you know that those areas have big problems, especially after you've seen what can happen. So having said all of that, there is a certain amount of distrust of the financial system in Europe at the moment. Also, the fact that we rallied just based upon the idea of the ECB is not going to do anything right this second. This has the distinct odor of a short covering rally. And at this point in time, we have to see how it plays out. But looking at this chart, I've got a little bit of a band of resistance here that I'm kind of paying attention to. And I really see it going to about 131. With this 50-day moving average here, it'll be interesting to see how things play out. But on signs of weakness, I'm willing to sell because I think the risk to reward ratio is there. This is definitely an overdone rally. And with that in mind, we should at least get a pullback from it. But either way, the situation in Europe is not getting any better. Really, they just keep papering over the cracks. And now in Italy, we have this situation with the government not being able to form a coalition. Well, this hasn't gone anywhere either. There's still concerns about whether or not they'll vote themselves out of basically paying these loans back that everybody's concerned about. So there's just a lot of uncertainty in Europe. And because of that, I just would prefer to not be long the euro. It is possible that the market totally ignores all this. It has done it in the past with the euro, but right now it just looks like with this stair-stepping action here, we are going to continue to have a bit of resistance going higher, and certainly the easy pips for the euro bulls have already been had. I'm looking for a resistive candle in order to continue the down leg.